Hey guys, welcome back to another video. Today we'll be taking a look at ROST Stores Inc. Starting out with their overview, their current PE ratio is a 24.28, which is not too bad because the goal is to look for companies with a PE of about 20 or less. So this is something important to look at because it shows you how risky the investment will be. Looking at their dividends, they currently offer a yield of 1.05%, which comes out to 28 cents per share. It's always nice to see when companies give back to their investors when given the opportunity. Moving into their income statement now, let's look at their revenue. So as of the most recent year, they're bringing in 12.53 billion, which is down from previous years. I think this might show a potential buying opportunity as the one bad year might scare some investors away. Before the most recent year though, it was looking great. They were growing the revenue every year, so you can look at that pattern and assume that they'll keep it up in the near future. Now looking at their net income, it's looking the same way as the revenue. It was growing very steadily and then it dipped. I wouldn't be too concerned unless there's another dip in the next year coming. The last thing to look at on the income statement is the shares outstanding. So this is something you want to see be decreasing. The more it goes up, the less your shares are worth. So as you can see, it's been going down very well. They started at 392 million and managed to lower it down to 352 million. Moving into the balance sheet now, we're going to take a look at their current assets. So they're looking great as they've more than doubled. They're currently at 6.69 billion from the 2.81 billion in 2017. This is an increase of 138%. So going into the future, we can assume that this will keep going up at a good rate. Next, I want to look at their current liabilities. Right now, they're at 3.97 billion, which is an increase of 127%, but at least it's growing at a smaller rate than the current assets. So remember the number 3.97 billion, because if we scroll up here, you see that they have 4.91 billion in cash. So it's always a bonus to see that they can wipe out any current liability at any moment's notice. The last and one of the most important aspects to look at in any company is the free cash flow. So cash flow is important because companies that have a lot of money on hand have the advantage of being able to pay off any debt, invest into future growth, or pay dividends. So this is clearly something you need to see be improved on year after year. So as you can see, it looks great. It's been going up every year except the one tiny little dip in 2020. In conclusion, ROST Stores has some very good financials. Some criticism I want to give to them is I want to see them bounce back from the dip they had in 2021 with their revenue and their net income. I see this as a good thing though when it comes to a potential buying opportunity since it has scared away a lot of investors. You can see in the chart that it's down a lot from its peak this year. The last thing I want to see them fix is the rate of how fast they've been increasing their current liabilities. This isn't a red flag as of right now, but it could be down the line if they keep it up. Two things I want to mention before I end the video is my trading strategy is centered around finding value in a company. If I don't see consistent growth in most or all the categories I cover, then I tend to stay away. Secondly, I also want to point out that I am not a financial advisor. I'm just a guy speaking my opinion on stuff on YouTube, so I highly recommend doing more research before coming to the conclusion of buying or selling any stock that I talk about. If you guys have any companies you want me to take a look at, feel free to comment them down below. Otherwise, thank you guys for watching and have a nice day.